Welcome to Prescribing Prosperity with your hosts, John and Alex Soutsos from MedWealth Financial Services, operating through IPC Securities Corporation. In this podcast, we provide unique insights into wealth management, the psychology of financial decisions, and help listeners place the capital markets into perspective. Our aim is to help physicians, business owners, and other medical professionals to live their dream. Life is to live and enjoy, so we'll also cover health and lifestyle-related topics such as food, dining, travel, and unique experiences. Learn how global trends shape our investment strategy as we help you assemble your roadmap to prosperity.
Hello, and welcome to the Prescribing Prosperity podcast with your hosts, John and Alex Soutsos. Gentlemen, good to be with you again. Before we get this whole proceeding started today, however, I want to stop for a moment and acknowledge a couple of awards that have been handed out. John, you have been named the Discretionary Portfolio Manager of the Year. Not bad. Pretty good. Congratulations.
Thank you. Thank you. That's one of 11 candidates across the country.
Finalists. Yeah, one of the finalists. But that's still
Well,
impressive.
right, that's fine. Well, we're not going to downplay that on this broadcast, okay? We're not, just like Alex, we're not going to dismiss that you've been named a Rising Star Advisor of the Year. Congratulations, actually, to you as well.
Thank you, Bill. Thank you very much.
Very good stuff. And congratulations to you both.
Thank you, Bill.
I think you ought to take awards with a grain of salt, but I don't think you should ever ignore them. I think you should acknowledge them and accept them for exactly what they are.
Well,
and
yes.
With that said, we're going to get started on today's podcast. And last episode, for those of you who are paying attention, we focused on retirement planning, including managing behavioral risk faced by investors. Well, today we're going to focus on another form of risk, one that probably a lot of people don't think applies to them, or they don't think about it very much, but investors and business owners alike face it. Our topic today is foreign exchange risk. And to help us explore that topic, we're pleased to be joined today by Shael Stolberg and Jeffrey Dorfman of Global QFX. Gentlemen, how are y'all doing today?
Doing fine, thank you.
Good. Very good.
Shael and Jeffrey, good to have you with us today. And with that brief introduction, I turn this over to Alex to get this conversation going.
Absolutely. Thank you very much, Bill. So just for a little bit of background information, I first met Shael last year at the Toronto International Film Festival downtown. One of our mutual friends was hosting an event at the Ritz-Carlton, and Shael and I were fortunate enough to bond over our mutual love of sports, specifically basketball. We talked about a number of different podcasts, and just on the subject of the NBA and the slow demise of the Raptors, which actually hasn't been that slow. They went from winning a championship 5 years ago to being completely irrelevant by now. So that's just a mildly bitter perspective of a Raptors fan. But anyway, during that meeting, we also discussed some of Shael's work in the film industry. So, Shael, why don't you start off by telling us a little bit about your background and how you eventually ended up at Global QFX?
All right, Alex, thanks for that. Yeah, it's been an interesting ride over the last many years. Years ago, I actually started an office. I worked for a company out west that started the Toronto office on foreign exchange. So I did that, then moved on to some other work, eventually ending up in American Express, where American Express, they actually decided to open up a division for foreign exchange in Canada. They opened it up. I was one of the first people that worked for them. They lasted for 3 years and decided to shut down the division. And then through mutual friends, I ended up meeting Jeffrey, who I know had been in the business for a very long time, and we became friendly. And then recently I reconnected with him in regards to what he's doing with Global QFX. But throughout that time, my biggest passion has always been film and the film industry. And many years ago, I wrote books on film festivals. I had 3 of them published. I had a calendar that went out to all different festivals. I have previously been involved in distribution. I've associate produced 3 films over the last 2 or 3 years, and always involved with that concept. But I always felt that FX in itself is a very interesting avenue, particularly for certain industries. But I find that in the film business, it's not really taken advantage of as much as it could, because of the benefits of having managing your risk and so forth can really take advantage, particularly now in the changing times that we're finding.
Yeah, absolutely. And for us as well in our business, it is a big component. We have our portfolio is domiciled primarily in US dollars, and so foreign exchange is a big component of our strategy and a strategic decision in the way our portfolio is constructed in order to mitigate some downside risk during times of market volatility. But before I jump over to Jeffrey, I just want to ask you, Shael, why did they shut down the American Express office and after just 3 years in Canada?
It's a good question. There's a lot of answers to that. I think one of them is the fact that they didn't view it the same way. The way foreign exchange works in the US as opposed to Canada is a little differently. And the market is a lot smaller. And because we were a smaller area, it's harder to work with.
Right.
So I think the main thing also was a lot of the regulations in Canada really put a crimp in what they were trying to do. So after 3 years, I think they just decided to let it go, take that money, put it into the US. But I think after about 2 or 3 years after that, they actually may have shut it down in the US as well. So it was something they tried, and it seems like it didn't work out the way they had hoped.
Okay, fair enough. Well, speaking of regulations, I know Jeffrey loves regulations. So, Jeffrey, why don't you, I'm teasing, of course. Jeffrey, why don't you tell us a little bit about your background as well and how your career journey took you to this point at Global QFX?
The career journey is one of business development, starting in 1987 in the foreign exchange business here in Toronto. There was a little foreign exchange company that said, Jeff, if you can bring commercial clients, we'll work with them, and we'll make it worthwhile for both of us. And so, as a commissioned agent, I went out there and hustled, and brought in thousands of clients into the environment and made money. And that was what it was. We were trying to build a business based on the fact that we were undercutting the banks by taking a smaller margin of markup what the banks take on their foreign exchange. If you ever go to the banks and see the counter, you'll see there's a counter rate of 3 to 6 points differential between the bank's buy and sell price. So, and the 3 is when it's really tight for the bank. 6 is when they charge 3 cents on either side of the market. So if you know the market is 135 today, you'll be paying 138 on one side or getting 132 on the other side. And that's how the banks make money. So what I did is I went out there and I talked to people about their foreign exchange perspectives and simply said, hey, listen, you're going out to points around the world. You're going to China, you're going to India, you're going to England, you're going places around the world to try to find the best product that you can sell here in Canada. And you're saying to yourself, okay, I know the exchange rate right now is X, but you don't know what it's going to be when you actually get the goods in. So 2 things. One, I was simply saying to them, you should be aware of your exposure because that's going to impact your bottom line. You went out and negotiated your best price to purchase the product, but now you're leaving yourself exposed to the foreign exchange variable that comes up every single day because the markets are volatile and because they're affected by so many different things at all times everywhere in the world. So you don't always know what's going to happen. So what you need to have is the specialist who comes along and focuses on that and gives a better rate of exchange to you, the end user, so that you can get a better deal and keep more money in your pocket rather than give it away to the banks and the variables of the market. That's what I started off by doing in 1987. So I've been in business 36 now. It'll be 37 years in July, and honestly, it's been a good business for me. My experience is such that I understand numbers, I understand people, and I understand what people really want to do is keep more money in their pocket because I'm relatively cheap myself and I want to keep as much money in my pocket as possible. So I would go out there and I find customers and eventually I started my own foreign exchange company. I sold that and then moved on, and now we have the Global QFX. And when you mention the regulations. The reason why I called my company QFX is because it's qualified. Everybody who deals with me has to be qualified. In 1987, when I would knock on the doors and find some people to do business with, I would take their business card and I would simply say, "Okay, guys, this is what we can offer. I'll bring the business card down. We put it into the Rolodex, and if they called or if they faxed something into us, the good old days, okay, if they called, we'd know who they are just by looking at the Rolodex." And
Right.
that's how we start doing business. We'd write up a check. We'd send a courier to the door. We'd pick up a check, and we certify that check at our expense. That's how the business worked today. Today, everything's done electronically. EFTs, wire transfers, pre-authorized debit. It's a much better system for the end user, for myself. There's risks involved in every aspect of the business, but you want to mitigate the risks as much as possible. But back then, you didn't need to verify who the customer was. You didn't need to know who have the articles of incorporation, who the beneficial owners of a company are. You didn't need to know that because there was no regulations. And then slowly but surely, regulations came into place, starting in 1991, when I think it was the Proceeds of Crime and Money Laundering Act came along, and then in 2003 with FinTrack. I've seen all these things happen where along the way, it's a matter of knowing who your client is and what's the source of the funds, what they're buying, what they're doing with the funds, and documenting it so it all sits in a file. So if a government agency like FinTrack comes along and says, "Okay, guys, what are you doing? Why are you selling the money? Why are you buying the money? What's going on?" You have to be able to establish it, because the government is basically saying, I know this is long-winded, they're saying, don't deal with money launderers, terrorist financiers, tax evaders. Just don't deal with them. Okay. And of course, that's how the business has evolved throughout the years, but it still comes right down to sharpening the pencil and giving people a better rate of exchange when they're looking to buy or sell money.
So, Jeffrey, that was a great explanation of some of the details involved. I just wanted to take it back up to the 10,000-foot level.
Okay.
Give us an overview on how foreign exchange works in Canada. How do the banks get involved in foreign exchange? I know banks have very large foreign exchange departments. At least they did. I don't know what it's like now, but I'm still assuming the money market department of the investment banks is quite significant in size. How does it work in terms of the large banks, and how do you fit in within that world?
Okay, so how does it work from the point of view of banks' trading rooms? Well, every major bank, which is there are 5 or 6 banks in Canada, I guess now HSBC is gone, so I guess it's now just 5 banks. Yeah, whatever. So every major bank in Canada has a bank trading room, and in that trading room, they are trading their customers' requirements throughout the course of the day. Now, I always highlighted the small to medium-sized transactions, starting at $10,000 amounts and greater. The banks are dealing with millions of dollars at a time. And so that's where the bank's trading room works. At the wholesale level, that's where we come along and we buy and sell at the wholesale level in the bank's trading rooms. Now, what traditionally happens is, you would have a mining company that would be purchasing, let's just say, actually a better example, you'd have an oil and gas company at the end of every month saying, okay, I got in this many US dollars for all of my oil that I sold into the United States. Well, those are millions of dollars of coming in. And generally speaking, those movements, when you change the funds from US dollars into Canadian, because all of your expenses are in Canadian dollars, then you have to that will effectively move the market because of volume. It's a supply and demand curve of sorts. You take a look and say, okay, what's available on a day-to-day basis in the marketplace? Who's buying, who's selling, who's buying, who's selling. I would say to you that 60% of my time on my clients are buyers of US dollars, 40% sellers. And in fact, in the foreign exchange world, I would say that 95% of my business is US-Canada transactions. So in Canada, what we're dealing with here is we are a branch plant of the United States. We're simply we're recognizing that we have to do business in US dollars around the world, because the US is the biggest consumer in the world. And so, and as the default currency or the reserve currency of the world, everybody will accept US dollars around the world. So when you go to China and you simply say, how much are you going to buy these widgets for? You want to buy a sofa, you want to buy computer equipment, you want to buy something else. They always denominate it either in renminbi, which is the local currency in China, or they'll buy it and sell it in US dollars. Well,
Okay.
that's all predicated on something from Richard Nixon's days, if you don't know. When Richard Nixon came into into China and simply said, hey guys, we want to trade with you. We want you to come away from communism. We want you to open up the marketplace, but we want you to do it in US dollars. Okay? That's the reason why we're dealing with US dollars. So Canadians, we have to buy US dollars to pay for our widgets in China and bring them over here. So inevitably, and I really hope I answered your question, what we're doing at the banks level is we're moving money from one jurisdiction to another, from one currency to another, where they call it fiat currencies. If they went from fiat to another fiat, because that's how trade is done.
Yeah, Jeffrey. So what? Thank you. What I was also looking for is bringing it down to the level of the average individual. So you've obviously given a clear explanation as to how businesses transact, but the average individual who might be going on vacation and may be traveling to the U.S. and need $5,000 or $10,000, or they may want to be traveling to Europe and need an equivalent amount of money. How does that work when they walk into their branch level, and what do you do differently that might be appealing to those individuals?
Well, for those individuals, you ask a question, John. When they walk into the branch, they're going to be getting the counter rate of exchange. The counter rate of exchange is just that 3% off market that they're going to be buying or selling their currencies. If you come in and say, I want to buy more than $2,500 at the TD Bank where I bank, they'll say, I'm sorry, we can't give you more than $2,500 US. If you want a different currency, then you have to go elsewhere because the banks don't regularly keep euros or pounds on hand.
Right.
You have to order them in advance. Today, with credit cards being the way they are, it's cost effective simply just to say, okay, I walk into the banks, or I walk into a different country, put down my credit card, and let the credit card system take the 3% and not hit you for service charges along the way. That way, you have the protection of just having your credit card with you.
Right.
But it didn't necessarily work when I was in China. In
Right.
China, I tried to buy a train ticket with credit card, and they said, I'm sorry, we don't take Visa and MasterCard. So you got to pay attention to which country you're in when you do those things.
Right.
So, yeah.
So generally speaking, for people who are traveling to the United States or even to Europe, they're better. What you're saying is they're better off just simply not getting the other country's currency in advance, just simply using their credit card or debit card, and letting the bank deal with the foreign exchange.
I would say yes on your majority times. If you know you're going to spend $5,000 or more, then take some cash with you. Take something with you because you need something on your. But if you're just going to spend a couple $100 here or there, I can tell you upstairs in my drawer is there's some Vietnamese currency, there's some Chinese currency that I'll just never use again, and
Right.
it just sits there. Okay, so it wasn't necessarily the most cost-effective approach to traveling as a tourist. If you're
Right.
dealing with a different world where you want to be able to say, I need cash in my pocket, put $500, $1,000, $2,000 maximum in your pocket just so you have something. But you travel down to Mexico and you take some Mexican pesos. I don't deal with my business is not set up for those type of transactions. My business is set up for commercial dollar transactions, larger deals, because what I do is I take a smaller margin of markup and then offer the services, the wire transfers, the payments around the world, etc.
So if a Canadian is going to acquire property in Florida, for example,
perfect.
Is that where you might be coming in?
100%. Yeah, because then you're dealing with the commercial dollar value. They're $50,000, $100,000, $200,000, and you're looking to get a better rate of exchange with the banks are offering. Absolutely.
Right. So up to what number does it make sense to go through the bank, and beyond which it makes sense to go through a private company like your own?
So if I save somebody 1% on a $10,000 transaction, that means I'm saving them $100.
All right.
Okay. But truthfully, I need to make money myself. So,
Sure.
What I look for is amounts greater than $10,000, because if somebody's doing $50,000 and I save them the 500, I'm making a good money myself, and I'm okay with that. Okay.
What are some of the factors that are impacting exchange rates?
Around the world, I would say 50% of the time, this is what I've written about this on my on different articles around the world. 50% of the time, you have interest rate discussions, interest rate movements that impact the currency rates. 25% of the time is other economic numbers. You could have the price of gold. You could have economic numbers such as the employment rates or the inflation rates, etc. And the other 25% of the time, John, I have no frigging clue what's going on.
Right.
Okay.
There's a lot of nuances and things that we don't all get to see in the financial markets that cannot
If I told you, the classic story, there was one time I heard of, in a bizarre sense, a billionaire on the other side of the world decided to put some puts and options out there, and he said, if the Canadian dollar moves to this point against the Turkish lira, then I will lose this $1 billion. But it had to move 10%, 12, 13% in a short period of time. Well, guess what happened? The traders in the banks found out about it, and they moved the market just so this billionaire would lose the $1 billion. Okay.
And this is a true story.
It's a true story. It's got to be in the early 2000s. I just can't remember the year anymore because I'm getting old.
Okay.
But I can tell you, it really happened. And within why was the Canadian dollar move from, pick a number, 132 to 140? Why did the Turkish lira go from, pick a number? It doesn't make a difference. It just moved. And
Right.
the traders found out about it, and it was like chum in the water for sharks. It was blood in the water for sharks. It was ridiculous.
On the business side, how do you what tools do you use to help manage the foreign exchange? For example, forward contracts, spot exchanges, etc.
Right. So that's exactly what we would do. We offer forward contracts. We offer spot. The mitigating the exposure to the market variables is something that I talk about on a regular basis. You want to be able to say, at what point do you feel like you're comfortable? One of the things I can offer are options as well. I believe wholeheartedly in forwards and spot, because options have a downside to them that it gets ugly from my point of view. But from
Jeffrey, for the people in the audience who are not sophisticated and don't know the details of this terminology, can you explain what a forward contract is, and then explain what a spot exchange is?
That easily. So a spot transaction, starting with that, is buying today for tomorrow or the next day, securing a rate with the bank's trading room. Because every day, what you don't realize is that money has a value date associated with it. So there's a cash value, i.e. today's date, or a spot date, next day, or the day after, depending on which currency is involved. So it's to me, I always say, it's like having goods in a warehouse. Is it ready by the loading dock today, or is it ready by the loading dock tomorrow or the next day? How do you pick them up? But on a forward contract, you say to yourself, okay, John, you know what? I bought these widgets. I know they're going to become due sometime in the month of April. I just don't know when the shipment's going to come through. So I like today's rate because I know I've made money with today's rate. So I secure today a rate that it covers me for the month of April, or May or June or July, 6-8 months down the road, whatever you want to do. And you secure the rate today with a forward contract. Now you do so with a window so that it's available between pick a number. I'll use go back April 1st to April 30th, or June 1st to August 1st, somewhere in that range. You want to have a window available to you that you can draw down upon it, because you don't know the exact date you're going to need it, but you're going to need it. And you can buy the exact amount of money that you need, or you can buy a ballpark amount of money. And oftentimes I have clients who say, okay, buy me $1 million. What's the rate? We quote the rate, we accept it, and then we secure that rate for delivery down the road. That's what a forward contract does. Now, an option is similar in that you could create an expectation of a delivery, but the problem with options is that if the market moves significantly from one direction to the other, it could either, one, be the best thing possible, or two, the worst thing possible, because it forces you to take rates that are not necessarily representative of where the market is at the point in time, because you get knocked in. And I'm old school, and I just prefer forward contracts on that basis, because then you know what your costs are, you know what you're going to deal with, and you don't have these variables affecting you. But with a forward contract, we either secure it with a deposit of 5 or 10%, or we can offer no money down forward contracts if you provide us with financials, so that we can actually take a look at your document, at your financial capabilities, and not leave ourselves too exposed, but recognizing wholeheartedly that we want to make it a win-win in terms of ease for the customer and profit for ourselves. So we try to keep it simple from the point forward. But what you're doing is today, by locking in a forward price today to satisfy your requirements down the road, you're keeping your profit as a businessman, you're keeping your profit and your costs in line so that you know where you stand, because you're not in the foreign exchange business. You just need a foreign exchange specialist, so somebody like ourselves who can take care of your requirements for the future as you go out in the world, and you need somebody who's on your side at that point.
So Jeffrey, and when we first spoke a few weeks ago, you had mentioned that you run a large portion of your business through fintech companies or financial technology companies, rather than the banks. What are some of the advantages of structuring your business in this way?
Well, I'm a niche player. So those fintech companies have specifically highlighted the niche and offered payment services within that marketplace that are advantageous. When people send money around the world, they can do so by the traditional method is a SWIFT transfer. Now, the SWIFT transfer network started off in 1972, I think, but it could be wrong. But they started off in the 1970s. And the bank's legacy's structure and their technology is set up so that SWIFT transfers are all part of the system. But SWIFT transfers are cumbersome. It's an interactive tool between the banks, where Bank A will say, yes, I have this money, I'm sending it to Bank B. Well, Bank B was receiving it, but that could be 2 hours later, an hour later, or 2 days later. We don't know, because we don't know how big Bank B is. So they may have an intermediary bank, at which point and say, for example, if we send money to Ralph's Bank of Florida, and Ralph's Bank of Florida has a deal with Bank of America or JP Morgan, then it has to go through JP Morgan and Bank of America in order to get to Ralph's Bank. So that's why it works that way. Whereas today there's two other technologies in sending money into the United States. For example, there's the ACH, the Alternative Clearinghouse, where things are cleared overnight, just like a regular check. The only difference is that it's electronic, so it's solid funds. The bank recognizes it in your account the next morning, and that's a very effective tool. And that's, for a lot of people, that's replaced checks in the United States, because they do a lot of electronic funds transfers in that fashion for the purposes of getting the funds into people's accounts with very little risk, because checks have been stolen out of the mailboxes, the fraud associated with them, it's just enormous. Whereas the ACH, it comes from the company, it comes from the company and goes directly to the company. And the network is there. Now there's something called real-time payments, and real-time payments are such that the funds end up in the person's bank account in 10 minutes time, and it's all done electronically, because all the banks are all on this network with the ABA numbers, etc., where it's understood, and the transfer network is all set up with technology. So then people are moving away from SWIFT to FedWire, for example. And now with the development of more and more payment methods, you can have local rails in every country. SEPA, which is the Single European Payment Authority, allows people to send euros from one jurisdiction to another as a single payment with no cost or very little cost. So you're getting away from the traditional wire transfer charges. And when, for example, when I receive funds at the TD Bank, which is for my commissions, for example, that come in from around the world, they'll say to me, okay, Jeff, there's a $17.50 charge to collect a wire transfer fee. Okay, what can I do about that? But if somebody is going to send it via a fintech company, then the local payment rails will be in place, and they'll get the whole dollar. They'll get the full amount.
So that leads me, or dovetails nicely into another question I wanted to ask you, was how is the widespread adoption of digital currencies, i.e., cryptocurrencies, impact the market, and how is that going to change and evolve the way that these transactions occur?
It's a great question. It really is, because in the end, cryptocurrencies right now are speculative in nature. And years ago, the technology was being developed and modified, and the blockchain does work. Okay, so here's what happens, and it's kind of scary as you use the word dovetail, because I'm not always a conspiracy theorist, but I'm going to tell you that I will look at China as an example of what happens when you have a digital currency in place, because now there's a social credit score associated with every individual in China.
Yeah.
And that social credit score impacts their ability to have a banking facility, and banks moving money from one jurisdiction to the other, because the banks will simply say, we don't want to do business with people like you. Find your own way, and it's detrimental to society from that point of view as we move down that path toward in digital currencies. The problem with it is the compliance, because you don't know who's behind the money unless you have access to the blockchain. And if you have access to the blockchain, because remember, with Bitcoin started with a permissionless environment. So a permissionless environment means to say, I don't need permission to answer this blockchain. I just need to be able to give myself a 128 gigabyte or 128 digit code that says, 9671111, 9671111, 9671111. And if that represents Jeffrey Dorfman, then that's great. Okay, that's fantastic.
It's pizza.
But no, I don't. Okay, it represents pizza, right? But the point is, if it represents something, then you can trace all of my transactions all around the world.
Yeah.
But you have to know who I am. You'd have to know who 9671111 is to trace me. Okay, because it's permissionless. I didn't fill any forms. When I walk into my TD Bank and I simply say I'd like to open a bank account, they have my address, they have my phone numbers, they have everything about me, my photo identification. They've got everything that they need and want. Okay, when it comes to the crypto world, you don't need it. So now it's a problem. So how do you trace that? How do you trace that? Is it good or bad? In some respects, it's fantastic, but for a lot of people, because when you move money, and I have the ability to do this, when it comes to the crypto world, the way it works is that you can move money from one wallet to another wallet, and that's a valuation. So now, when you move that wallet, you better do a test, because you have to know whether or not that wallet exists, because there's different codes in different jurisdictions around the world. So there are, it's still developing. It's still moving in the right direction. It's still happening, but it hasn't solidified with one standard that everybody can unite with around the world. There's a USDC, which is a US dollar digital coin, which is offered by a company called Circle in the United States. And that coin the blockchain is available to everybody, I guess. But they're dealing with something called stable coin. And a stable coin, from my point of view, means to say that I know it's worth $1 US. Okay, now there's going to be commissions associated with that. They're going to take a percentage off of that. But overall, it's worth $1 US. It doesn't have the variables in play that a Bitcoin would have, where you have it going up and down 4 or 5% in a day. 2012, we were sitting in our office in our trading office, and we were sitting around saying, okay, what's going on in the world happening here? And we watched the price of Bitcoin come from $900 down to $250 in about 2 or 3 hours time. And during those 2 or 3 hours, we were wondering, what the heck is going on? Now, I'm going to tell you, my conclusion at the time was that it's a Ponzi scheme. Now I've started to understand what Bitcoin is and what they're doing with the Bitcoin, because it's a finite number of coins. I want to say the number is 21 million coins that they're going to produce in the lifetime of Bitcoin. And so, because it's a finite number of coins, it can never, and probably 4 or 5 million of those coins have been lost. It'll always have a value, because it's just like a commodity that people will buy and sell around the world. And now with EFTs that are moved around, the valuation is going to be more substantial, because people are saying, well, I need these for my portfolio. Okay, that aside, now Bill, I'm just going to ask you, you're going to judge on this next comment whether or not you want to leave this part in. Okay, it's up to you or not. I don't care. All right. Well, today there was an article I wrote, and it went during COVID in 2021, and I never published it because I was worried about what was going to be said, and that was this. I was looking at the value of Bitcoin and I was asked, why did it cross the $30,000 threshold? What happened that moved it from 18,000 to 30,000? And I drove myself crazy. And I said to myself, you know what? This is no longer a Ponzi scheme. What's really happening is they're recognizing value. If everybody values this, and it's on a universal basis, if people in China can buy Bitcoin, if people in Vietnam, in South Africa, in Russia, in Canada, the United States, South Africa, South America, wherever they are around the world, if they can all do it, then it's the most united basket of value that expresses itself in the world. And now I start telling people, I look at this and I say to myself, if that's no longer a Ponzi scheme, maybe now with all the central banks printing money the way they are in the United States, with the money supply increasing dramatically in Canada, in Europe, everywhere else, those are the Ponzi schemes. And that's the reason why our purchasing power works around the world is being devalued, because we've been just printing more and more money, and we're not accepting the fact that we have to be responsible for what the value of that money was. Because
Yeah, sorry, Jeffrey. I just wanted to jump in. Yeah, that makes total sense, and I think it's your explanation for the changeover from valuing it as just a Ponzi scheme to a more readily stable alternative to fiat currency is a valid one. So I'll just ask you one final quick question before we jump over to Shael, and that was just quickly: are there certain countries or currencies that are more difficult to work with? For example, I would assume it's probably easier to transact in US dollars than it is in other currencies, just based on demand for the US dollar itself. Can you comment on that quickly?
in the United States is easy to deal with, because during the history of Canada and their ability to move money back and forth across the border, the US-Mexico-Canada agreement most recently is, it allows for the even trade of goods and services and currency back and forth across the border. But we deal with other currencies. So the answer to the question is that there are sanctioned countries that we're not allowed to deal with, because the sanctions exist in the United States. But we all know that Iran is a sanctioned country. Russia, of course, because of the war. There are other countries like Egypt, North Korea. There are restrictions, there are sanctions. You have to pay attention to those things. But the United States dollar is by default the reserve currency of the world, because of the way they set it up. The way they set it up with oil and gas, the way they set it up with trade with China. That's what made them who they are today. And as countries decide they want to trade between themselves, for example, China and Brazil, they've got a trade agreement, and they trade in Brazilian real and Chinese yuan, and they just go back and forth between, and they do not touch the US dollar. Iran and China, they do the business with sanctions countries. China said, we were sanctioned for such a long time, we're not interested. So there are different countries, different rules and regulations. But from the Canadian point of view, we're in a safe trading bloc in North America, and that's allows the ebb and flow of the easy flow of currencies to go back and forth, not without any restrictions. There are times when a bank trading room will simply say, or a compliance department, that's better way of saying it. There are times when a compliance department will come along and say, I think this transaction is suspicious. We'd like to need to have more information. And once we get into it, we can, generally speaking, find what they're looking for and satisfy their requirements or not. And I think that answers that question. But I'm not even sure if I did answer that question. I don't know.
That's okay. Thank you, Jeffrey. That was great. So I'm just going to flip it over to Shael. Shael, you still with us over there?
Yep.
Hanging
I'm all
in.
good.
All right. Good. All right. So in terms of finding the business, Shael, so tell me a little bit about, or tell our audience a little bit about how you go about marketing your services to potential clientele. How do you find people who are in need of foreign exchange services?
Well, if you look at it like any other business, right? The goal is to find people that need your service and that you can help them do that. So anyone who's looking to do currency transactions, payments, payroll, anyone that needs to pay a bill 6 months from now in another currency. So you need to buy those auto parts in the United States and you have all your money, but you don't need to buy them for 6 months. So what you can look at, you can say to yourself, okay, the rate right now is 135 if I'm going to buy, right? They say, all right, well, that works for me. I look at my budget. I look how much my interest is going to cost. I look what my margin's going to be. And I say, oh, that money's good for me, right? In 6 months from now, particularly what's going on with all the other avenues in the world, as we all know, there's going to be a lot of fluctuations going on in the next 6 months with what's going on in the United States. It's an election year. Whenever that happens, there's fluctuations back and forth, right? So you say to yourself, I'm comfortable 135. I can do that. So you buy a forward contract for 6 months, let's say. You can draw down your money anytime from now to 6 months from now. You give, let's say, 5% of that, and you're set. Now, if in 6 months from now, it skyrockets and you would need to buy it, think about your interest rates before COVID, during COVID, and now, and how people were, for some loans that people were paying $190 3 years ago, they're now paying $310. Nothing's changed. The only change is that certain issues change.
Yes.
So you secure your money. Now, the way I would find people is people who need to do that. Any of those elements. You can go anywhere. You can just call up people, go to events. If you're focusing specifically in the film business as an example, contacting producers, production companies, distributors, rental houses, anybody who has to do anything. Because the way it works when you're, like, for instance, if Netflix is shooting a movie in Canada, right? What'll happen is, let's say it's a US company shooting in Canada. There's a lot of stuff going on right now for that. In I think in about a month from now, the new Schwarzenegger series is going to be shooting, and that's shooting in Toronto, right? Now that's from the US coming to Toronto, and they're working with somebody here. So they would send the money here to pay for the crew, right? Now, that's not for 2 months from now. Now they can wait for 2 months to send the money and buy the Canadian at that level, or they can say, look, our rates are better. We're stronger now. We think in 2 months it might be weaker because of everything that's going on in the world. So let's put a certain amount of money into a hedge that we can pay our bills. The way it works for payments in the film industry specifically is you've got what's called above the line and below the line. And a lot of times the above the line people are paid before the production starts, and the below the line people are paid when the production starts. And then you have the third level, which is the production, which is the post-production. So they'll get paid after the movie. So if you think about, let's say it takes 6 months to shoot your movie, right? During those 6 months, you're paying the cinema, you're paying the grip and the best boy and different people who are coming in to work. But before you've done that, you may have paid the writer, you may have paid the director, you may have paid the cinematographer, you may have already done that. Then the movie gets made. It's 6, 7 months down the line. And now we have to do the post-production, which is the editing and the color correcting and the audio and all that stuff. Now that's 7 months from now, right? If we know we're paying a specific currency, we may want to lock in the amount of money that we have and then know we're protected in that sense with a forward contract. So way I look for clients is contacting those people, knowing that probably going to need my skills. You can look at importer exporters or logistics people, hospitality, travel. All these companies are probably dealing with other currencies. And in Canada, it's a little different because in the United States, you can generally be a pretty big size business and never deal with any other currency but US because, as Jeffrey said, even though it's waning a little now, you can usually use US currency across the borders, right? A lot of times in the past, you would go to Japan or China or Europe, and they would accept US for payments. You didn't need to change it into the local currency sometimes. So it's a big company. Whereas in Canada, Nobody's taking Canadian dollars to purchase a large extent of anything unless you're in Canada. So if
Okay.
you're going outside of Canada, selling or buying outside of Canada, you need to use whatever currency is represented in that country, or US,
Right.
right?
That
So
makes
you
sense.
can, right? So that's how it works. So when I'm looking for people who are going to need those services, and how could we work together to make it work best for both of us? If that answers your question.
Shael, are there certain industries that have a greater need for foreign exchange compared to others?
Yeah, there are, like I said, a few of the others, because if you think about if you're going outside of your country, right? So if you're looking at, there's so many different, a few of the ones that I had mentioned before, think about logistics, right? Think about travel, think about tourism, right? Technology, software, if you're looking some financial services, you're looking at goods and apparel if you're buying stuff from China, right? Pharmaceuticals, healthcare, right? If you need to buy huge, you're a doctor in Canada and you need to buy a X-ray thing that's made somewhere else. Israel has been very strong in building a lot of technology and a lot of software. So you gotta buy from them, right? Or you can buy things from Japan, or if you're going into Europe, or if you're going to the United States, if you're dealing with pharmaceutical, the automotive industry. Sometimes they can work things together, but there's a lot of different areas for that.
Shael, obviously you have a lot of experience in the film industry. How does filming across multiple localities affect production budgets?
That's the interesting thing. So as in Canada, like everywhere else, I would say the single largest change in the film business has been technology. You can't get around it. What's been happening over everything. Technology has reshaping every aspect of the industry. That includes pre-production, production, post-production, and exhibition. You have advancements in everything from cameras like the Red and the RE Alexa, editing software, remote filmmaking, cloud storage, AI tools that include DALL-E, ChatGPT, Sora now that is getting a big kick moving forward. This type of growth has accentuated, look at all the streaming sites that have happened in the last 20 years. Netflix started as a DVD service where you would get DVDs delivered to your home. And now everything's coming into your home. So that obviously hits theatrical and exhibition, and who's going out to the theaters and how are we seeing things in the theaters. Everything revolves around technology of what we've been doing. There's a second point I'll mention, but that's where I think the number one point is technology. And then I would say globally and in Canada, and particularly the US, I would have to look at what's happened with legislation over the last many years. You had the Paramount decrees in 1948 that basically demonopolized the film business. So suddenly you couldn't make a movie and screen it. They had to be two separate companies. And then moving forward from that, that changed to the FinCEN rules in 1970, where distribution couldn't work a certain way and you couldn't own certain elements. But then in 1985, the DOJ changed it. So there's a lot to discuss and a lot to unpack here. But the last thing I would mention in regards to legislation, which I find very interesting, is even though these decrees that said a company couldn't make their own product and exhibit it, in the 1980s, the DOJ in the United States actually stated that they were ignoring those rules. And in 2020, right in the middle of COVID, or right at the beginning of COVID, the United States actually terminated these. So that's why Netflix can go by the New Yorker theater and screen something in the theater, whereas in the past, that wouldn't be allowed. So I would say technology and the legislation that's been happening are the two major things over the last 20 to 40 years that have sort of shaped the film industry.
And so the elimination of this legislation has changed what exactly?
Well, it set it up so that you can no longer, when they called it the studio era, the studios would have, they would create the product, they would have the actors, they would have everyone, and then they would screen it, and then they would distribute it. So they owned everything. was what happened in 48 is the government came in and broke that up. They said, if you want to be distributing, you can't be making. You had to choose which one. That happened
Did that
again
help
in
the business? Did that help the industry, that breakup?
I think what it did is it helped the industry in a certain sense because you're not now, it's no more monopoly, right? There's no longer a monopoly. There's a bunch of people can make
the change that occurred in 2020. How did that
yes.
help or deter the film industry?
Well, you think about what happened with the strikes that happened last year. There was a huge labor strike that was going on through every different union. Well, if you don't have a competition, right? If you have a scenario where you have just one place where you can sell your goods, the gig economy, Uber, all these other things that's been going on in technology. How could you tell me that Uber is not a taxi service just because it's an app running a taxi service, right? How could you tell me that Uber Eats is not a food delivery sales service, distribution? It's all set up. You look at Amazon, you look at the numbers, that's what's happened. Because of what happened in 2010, which I find this is very interesting. In 2008 to 2018, there were 3 asset management companies and private equity firms. And what they did is they suddenly owned 88% of the S&P 500. They owned it all. And when you go directly to the film business, if you're looking at the film business now, you have 3 of the largest asset management firms and some private equity firms. They have stocks and majority stocks in Disney, Netflix, Comcast, Apple, Warner, Discovery, Amazon, Paramount Global. And as of 2010, private equity companies have acquired MGM, Miramax, AMC Theaters, and portions of Hulu, DreamWorks, Lionsgate, Skydance, and so on.
So, Shael, let me pause you right there. You're talking about asset managers. Are you talking about Vanguard and BlackRock and
yes.
State Street?
Yes. Those are the 3.
Yeah. Okay. So they when you say they own the S&P 500, whether they're investors on behalf of investors, they own shares in a large portion of the S&P 500. But they don't. Yeah, but they don't own 88% of the S&P 500. They own shares in the companies that trade. So how has their influence, if at all, impacted the film industry since that took place in the early 2010s?
Well, it all boils down to the fact of competition, right? If you don't have competition, if you have one company that basically owns everything that's going out there, then how can you be competitive in regards, how can a new player come on board, right? How could you sort of be more innovative? And what would the use of being innovative? Everyone owns it. But like I said, technology is the real key here because, 20 years ago, we didn't have streaming services, right? Like I said, Netflix was a CD, a DVD delivery service. Right?
Is this why we have the superhero movies all the time and nothing else?
And an interesting point to that, if you look at, I think it was 10 or 15 years ago, you had a percentage of the superhero movies were like 20%. And as of a few years ago, it went up to almost 70% because it's all about money, right? It's all about bigger budgets, big money. There's no use. You can't really play with it. If you look
are you saying the independent film industry is gone? The indies?
It's much harder right now, much harder. If you look at the heyday of independent film, you would say the heyday of independent film was probably late 60s, early 70s, and then maybe again into the 90s. Those are probably the heydays of what we would call independent film, films that were successful and independent and did very well.
Has this affected certain film festivals around the world, or are certain ones more dominant now than before?
The film festival industry has changed tremendously over the last 6 to 7 years because you look at exhibition. If you could sit in your home on an 80-inch screen and get anything that you want on the same time, there used to be something that they called day and date. Day and date meant that you would get it online the same time you get it in the theater. So what exhibitors would do because the exhibitors, remember, could not, the production companies could not own the theaters. So they had to deal with the theaters to put out their product. They would usually get windows, and their windows, first window, second window, third window. Your first window might be 6 months in the theaters. So the only time you can see the film for 6 months would be in the theater, right? Now we're getting to a point where maybe it's a month. At times it's what they call day and date, where, you know, you'll see at a film festival, a very big film will be at TIFF, and you can see it at TIFF on September 13th. And then it'll say on September 17th, you can watch it on Hulu or Netflix. So there's that 4 days where the theater is exclusive. So how are they going to make money on 4 days? So that's why we're seeing a real loss in theatrical performance. Why are people going out to the theaters? This is why these big superhero movies or the Taylor Swift tour or certain events to go to a theater are pushing people out there, not just to go see a movie. People used to go to their local Cineplex. They used to go to see a specific movie with an actor, or they would go because it's movie night. Tuesdays, we go to the movies. Let's go and see what we want to see. We don't have that anymore. So technology is the main key to that. Being able to do remote filmmaking, being able to sort of, you know, film stock. It used to be about $6,500 for one print to show a film in a theater. And if you're putting out 1,000 prints and you're releasing 1,000 theaters, and it's $6,500 each, over $500,000 just to print up the screen. Whereas now, to get into a theater, you press a button and you get it set up.
So Shael, so in terms of the technology, and one of my friends actually, he works in the film business. He is a visual FX coordinator at Pixomondo, my friend James, and I know that one of the things that he's talked about is how the technology has changed the way even they film and edit the footage itself. So he works on Star Trek, or one of the Star Trek TV shows that's currently in production. And one of the things that he's talked about is, instead of doing a lot of the stuff in post-production where they film in front of a green screen and then they add in the visual effects afterwards, they can even do it in pre-production now, where they're filming in a room that is basically a digital recreation of whatever the scene is that they're creating. And therefore the actors are, instead of having to pretend stuff is there, it's actually literally in front of them, using the digital screens that are setting the scene for them. Do you think that has made an appreciable difference in the quality of the production that is coming out, in terms of the TV shows and the movies, and the actors' ability to respond and create the setting?
That's a very good question, which has a lot of different layers.
Mm-hmm.
Because you have to look at what is your goal as what's better. Are you talking about a better performance? Are you talking the ability to make more money? Are you talking about the ease of use to edit? Mm-hmm. What is it? Because right now, if you look at films, for instance, if you look at film sets nowadays, it used to be, you see it in the old time movies, you know, you have the film, and the director is with the camera and they're shooting the actors, and the director might be there and the actors are doing their takes and they're in front of each other. Well, now you can have a scenario where the director may not even be watching. They may be in their tent with all the digital stuff. The cinematographer is filming it. The director may not even be by the camera. The director may be, you know, in a tent watching it on a screen, mm-hmm. right? You may have a scenario where the actor is acting to an understudy. You know what I mean? And they're acting and they're pouring out their heart, and that person's not even in front of them because it's you're looking at his face. Right? Now, all these things have been done in the past, but when you look at the creativity that we can do it, and I'm not saying it's a bad thing entirely, it is. It's great in a lot of different manners. But at the end of the day, it's what are you looking for? You know, are you going to have a film that, like, festivals are a good example. If you look at what used to happen with film festivals, let's say 20 years ago, and I'll give you an example that happened at TIFF. There was this movie that was sent in from TIFF, from this first-time filmmaker from New Zealand. It was sent to TIFF via, the regular way. They applied. The movie got found. It got seen, it got on there, and it won an award, and it launched somebody's career. And festivals, particularly the larger ones like TIFF or Cannes or Sundance, there's a lot of examples at Sundance years back, where they made people's career, right? They went to the festival. During COVID, there was this great amount of talks that one of the top and independent lawyers, entertainment lawyers in New York gave, John Sloss. And he did these little discussions right when COVID started, because everyone was like, didn't know what was going to happen. So he put together this huge Zoom meeting, and a bunch of people would come in and talk. And one of the most well-known sort of independent producers over the last 20 years was on there. And she basically said that the only time that she had real power was at a festival, because when she screened her movie and the buzz was there and everyone loved it and people were talking about it and there was rave reviews, that's when she could get, you know, all of the distributors in a room and get the best deal. You can't do that online, right? You know how it is. So that's the power. And right now, festivals are really hurting.
Right.
Because it's very hard to find these new gems. Everything is tracked within an inch of its life, right? So, and people are going out to the theaters. When you go to the theater, you have to go to the festival. You're spending money. You used to be able to pay a couple $100s for a pass. You can go see all these movies, see the screenings. Everything's going up. Where are people putting their money? Last year, Bell, after I think it was something like 29 years, Bell has dropped out of sponsoring TIFF. It is no longer the Bell TIFF light box. It's just the TIFF light box.
Right.
Their reasoning is they wanted to stick to their core business. Well, they own Crave, which is the largest streaming network, or one of them in Canada. So how is that not their core business? So why are they not there? That's the interesting element. You know, I truly believe that people will always go to the theaters, and I think movies are sometimes best at the theaters. But there are a lot of people, and maybe earlier generations. I'll ask you, Alex, what would bring you out to go to the theater to see a movie?
I want to see an engaging story. You know, I find, you know, a lot of the movies and stuff that I see right now are are the movies that come out. They don't really compel me to go to the theater, because I find it's a lot of the same stuff, whether it's either another superhero movie like my dad mentioned, or it's a rehash of or a remake of a previous movie that I really enjoyed, you know, a historical film, and I don't want to see it remade. And so what gets me out now is I actually like a lot of biopics. Those are the ones that usually get me to come out to the theater and get me really excited. Something that has, you know, a historical element to it. I love seeing period pieces. I love seeing events, or, you know, recreations of historical events. Like that to me is interesting and engaging, because it's something I haven't seen. It's new. And so that usually gets me out to the theater, and I get excited for that, because I like you, I used to love going to the theater as a kid. I remember going every week with my friends, or not every week, but it seemed like it. I remember, you know, thinking, okay, well, the Christmas time was going to be the new releases, and then the summertime was a lot of like sequels and stuff. And so like kind of planning around that time what movies would be coming out. And so it's not like that nowadays. Now it's, you know, I maybe go see 2 movies a year, as opposed to it was you know, half a dozen or a dozen every single year. So anyway,
And
that's
oh, that's very interesting. And if you look at it, if we look at it, we take it back to the business perspective. Right now, there's a lot of co-productions, and there are a lot of monies in different countries, and countries are trying to bring business in Canada. Canada, it's a multi-billion-dollar business in Canada to shoot TV and film, right? But you actually do have the advantage where, because of the technology, you can shoot things. You can be in Canada. Like I can do a movie, somebody can edit it. I can have the editing here, but we can shoot the movie of this documentary that I'm working on. You know, they shot all this footage in the desert in Morocco, for instance. Well, we can edit all of that here. The post-production can be here. The director could be on a Zoom and talking to the editor in Toronto, and we could be working that closely together because we have real-time connections, right? We have the availability with the foreign exchange if we need to sort of hedge money. If we're going to be shooting in Europe for a month, or 2 months. We have all that money going over there instead of having to be at the sort of waiting how the market works and how it shifts and how things changes with all the volatility with interest rates, with political things going on in different countries. We can lock in a particular forward contract, know our euro is safe because our budget, we've taken all this money to raise the budget. We can't lose it. You know, you have a budget of $20 million, or 5 million of it is maybe in another currency. And if that currency within 2 months shifts to 5 cents, you look, that's 5 cents on every dollar that you've just lost, just disappeared because you didn't protect yourself on that.
Right.
Right. And with independent films now, I don't think, because we're so busy trying to raise the money, trying to get the movie, everyone's thinking of everything else, and we just want to get it done, that we sometimes don't think about that moving forward. It's the same thing that happened when I did my festival book years ago. People would be so brilliant in being able to find the money, shoot the movie, get everything done. They'd have a finished movie, and at the end of it, they were like, well, what do I do now? Oh, I'll go to Cannes. Well, I'll go to Sundance. Sundance got like 10,000 submissions for 100 slots. You've spent all this time and money, and now you're at the vagaries of hoping that 1 or 2 festivals admit you. You haven't created yourself a festival strategy. You haven't created yourself a distribution strategy. You haven't set up what sales agents are best for you, what market is best for you, how you're going to do. These are the things that, you know, smaller people who make films may not be doing as strong as they should. There's an old line that said, well, fix it in post. Well, you can't fix it in post. As you know, this is an audio podcast. If the audio's bad, you don't have it. So if I'm on a set and the audio's bad and I can't dub something in, and at the end of it, I'm in the editing room and it's 3 months since I shot something in Morocco on the desert, and now I can't see or hear anything, I'm stuck.
Yeah.
Right. So, and there's also another term that they used to call, you know, last in, first out. You've raised all your money, you've done anything, you forgot something, you didn't get coverages or clearances on something, or you didn't pick up something audio wise, then you're sort of stuck. Right. So there's a lot of different ways to go on. There's a lot of different ways of looking at it. I just think the main change, as I said, in the last 20 years in Canada and globally is probably technology. Technology is the key because of the, you know, the strengths and weaknesses of where we have it. People are very concerned about AI and what is going to happen over AI, and that's technology based. So we'll see. I think there's tools are a great thing, but how do we work better if it's a tool or is it taking over?
Right. I think that's a great point.
You could be paid for something over years. If I sell a movie around the world and it's an educational film, every time I get paid, I get money coming into me. That could happen for 4 or 5 years in a row or longer. So that's one element. When you come to the actual production of a movie, like I said, as an example, with this movie that I helped out with a couple of years ago, we shot all of it in Ireland. We shot a couple scenes in England. We do the post work in Canada. And we have actors who are American. So right there, you're looking at different currencies. So we could have our budget that's in maybe our $2 million. Maybe 1.5 of that is in Canadian, and maybe 500,000 on is money we raised in the United States, as an example. So we've got 500,000 in the of US and 1.5 in Canadian. We're doing most of our shooting in Ireland. So we're dealing with the euro. We have to spend some money on pounds. Now, we're doing that over the next 6 to 7 months. Now, we could just wait until it happens, or we can secure some of that money in a forward contract and know we're protected in case it moves. Because what happens if our budget is $2 million and suddenly in 3 months from now, the rate changes astronomically and we're sitting in Britain and now our budget is no longer $2 million, but our budget is now $2,100,000.
So, Shael, do film production companies require a full-time staff member just to sort out all the currency exchange issues, or is that where you step in as a third party and say, I'll handle this for you?
Yes, that's how it works. Because generally, look, large companies, as we know, are going to handle certain elements, right? But I think a lot of times what happens is it goes to the accountant or the lawyer who's handling it, right? So if
Right.
you look at any budget, you look at a lawyer, he sets it up, or you look at your accountant who's creating your budget. So you have production accountants on your particular shoot, and the production accountants handle everything for production. They pay people, they bill things, all that stuff is happening. A lot of times they'll just work with the bank because it's the easiest thing to do, or to work with it. They might get forward contracts with the bank, right? They might work with the bank, right? Generally, unless you're a huge company or a large production company, you're probably not going to have someone specifically focused on your FX. You'll have somebody dealing with all your production, and that will be one part of it. But there's so much going on. Isn't it easier to have one person outside being able to handle it? So, that's taken care of. I don't have to worry. At 11
Right,
o'clock at
right.
night, if I need to transfer $50,000 to the UK because our actor can't make it to Ireland because he got sick, but we need to shoot it, and I need to transfer that money, I can go online and do it, and it's taken care of. Rather than, oh, do I have to deal with the bank? How long is it going to take? Is it going to take 3 days to get there? When's the money
Right.
coming in? All those worries are taken off your table.
So let's shift gears a bit here. Canada has been playing a big role in film production in the last few decades. Why does Canada have such a large presence in the film and TV business?
Well, there's a lot of reasons why that has occurred. And over the last many years, there has been a growth over the last 20 years, as you'd say, in it, even longer than that. Probably once the Toronto Film Festival in the 70s got created, then they created the Academy, and everything started to build towards that. So one of the main reasons it started was because of location, right? You have a location that you can sort of fake for other places. So you can come to Toronto and make it look like New York. You can go to Calgary and make it look like Wyoming, right? You can go to Northern Ontario and make it look like Michigan,
Right.
right? And people can do all these shows and make it look like it's the US. And aside from other incentives, you're looking at currency exchange. So you're looking at making 30 cents on the dollar
Right.
at that point. So that's one of the main things. You have now, because over the last 20 or 30 years, we've been building our crew. You look around the world, some of the best crews, some of the best directors, best cinematographers, best actors in the world are Canadian.
So we have good talent here in all areas of film production.
Very good talent in all areas. In all areas, we have great talent in the crew and in the directors and producers and so forth. So people are looking at that level. And then there are incentives involved as well. Now, incentives occur around the whole world. But what happens is you can get tax credits that benefit you as a certain percentage that go against what you're doing. So basically, it's like a loan up against your production. You put in X amount of money, I guarantee it, but I'm not going to get it back for, let's say, 1 year or 2 years, right? So you're giving that, and you'll get a percentage off of that. So you'll get your money back, but you might make more, because what if it's a big splash? What if it becomes a huge movie and your percentages? You can make a lot of money, or you can get your money back. That's another element to work on.
Speaking of huge movies or not huge movies, are there any film projects you're currently working on?
Yeah, actually, there's a couple of interesting ones that I'm working on. I actually just had a few that took some time to get out there, and one of them is just played at TIFF, and it's got a lot of very good stars in it. But what I'm working on now that I'm excited about is it's an unscripted co-production with Italy, because the advantage of Canada having their own co-production agreement with Italy, that we able to get benefits. So what that means is if you use Italian talent, or if you use Canadian talent or anything to do with it, you can get those tax benefits. And it's a co-production with an Italian company. It's called the Star Hunters. And really what it is a fascinating story about an Italian company who've been traveling around the world for over 30 years, collecting meteorites, like space rocks, and speaking to scientists and astronauts about the origin on life on Earth. And because of this passion, they've actually now worked with NASA to explain to the new astronauts basically what these meteorites and spacewalks are. That's one that's right now, we've got most of it shot. We're just looking for a little bit more. It's very exciting. We've got the whole world to put it out of. Another one that I'm working on is there's 2 unscripted limited series. One revolves around musicians from the 60s and 70s and 80s. And the other one is a true crime, and Alex will love this. It's a true crime series involving a major league baseball player from the 80s.
Nice.
And I'm working with an award-winning US company on those 2. So that's exciting.
Wow,
Very
that
cool.
sounds like you have a lot of things on your plate. Switching quickly back to Jeffrey, what are your plans for Global QFX in the future? How do you hope to continue growing and evolving your business?
Every single day, it's a new opportunity. We're always looking for new clients, always looking for new opportunities to satisfy people's requirements in the marketplace. On Friday, somebody was calling me and said, okay, I have a property in Europe I'm selling and I need to get the money out. No problem. Here's our account information. Transfer the funds into this account. But before I set you up, I've got to actually get you qualified. So I need your photo. I need your photo identification. I need to fill in the application. And then once we do all these different things, we can establish that we know who our client is. And now we can accept their money and then just transfer the money from one jurisdiction to the other, and give people a better rate of exchange and an easy service to work with.
How are you hoping to grow your business?
To grow the business, day
Yeah.
in, day out, knock on doors, day in, day out, talk to people, network as much as you possibly can. This podcast, we're always looking for new opportunities.
Right.
You know,
And
so
Shael is a big part of that.
Shael is a part of it. Every day we all have to do our part. I never say that I'm the best or the worst. I just go forward, put one foot in front of the other every single day, and just take the calls and make things happen. And Shael's a big part of it.
Very quickly, just want to go back to Shael really quickly. Shael, what would happen to the Canadian film industry if the tax credits were cut out? Would companies still be incentivized to work here?
Well, that's an interesting question because it all depends on what level and what size. You have to look at what's been going on in the last few years. If you look at a few years ago, there's a 5-year waiting list to get into a studio in Canada. You couldn't get in one. You got to wait 5 years.
Right.
That TV show Star Trek, that was built. It's just a whole area. So if they take out the incentives, then there would be an issue. Like I said, there weren't as many incentives in the past, but you have the rate of exchange. These incentives help, but who are they helping? Netflix has just committed a couple of years ago $500 million to build a studio here. The CineSpace has expanded their studio. Pinewood has expanded their studio. So there's work coming in. There's a lot of work coming in. But how do we help the lower filmmakers? How do we create an industry of our own rather than somebody else coming in and taking it? How do we build new talent so that we can move forward? That's a question I think we're not dealing with as well as other areas in Canada.
Okay. All right. Well, thank you for that. One last question for Jeffrey. The one issue that plagues many entrepreneurs is the issue of an exit strategy. What is your succession plan? What are your plans for the business when it comes to walking away?
Well, I already walked away once. When I sold my company in 2014, I walked away, but clients kept on calling back and saying, "Jeff, find an answer for me. I need a better deal than what I'm getting right now." So I have an old mentor of mine. When I had this conversation with him, he was 77 years old, and he said to me, "Jeff, never retire. Never retire. It's boring. There's nothing to do."
Yeah, I think Kevin O'Leary made that statement after he sold his first business and he retired for a short time. He said, I can't stand this. It's way too boring.
It's way too boring. I love the foreign exchange business. John, I'll tell you a cute little story. I grew up in a place called Coquitlam, British Columbia. If you know where that is, okay. Yes. The home of Terry Fox, Port Coquitlam, Port Moody, that whole area. And back in my mother, about 15 years ago, gave me a box full of my old mementos, and in it was my grade 3 report card from Coquitlam, from Hillcrest Elementary School in Coquitlam, BC, and it said like this: "Jeff needs to practice his phonics. He needs to work
Uh-huh.
on his skill. He needs to read more. Everything an 8-year-old kid doesn't want to bother doing,
Of
you know.
course.
But of course, it's very funny. The next part is because it applies to me to this day. Under math, Jeff knows how to add, subtract, multiply, and divide, and he's also very good at counting money.
Oh.
So I tell people honestly, everything I do in business, I learned in grade 3. Okay, I learned.
Perfect.
So I know that the numbers world, it's just fun for me. Do I
Right.
know how the valuations go up and down? Yeah. Do I know that war impacts this, impacts that? Yeah. Can you speculate a little bit this way, that way? You can. I'm not going to tell you I've got a lot of hair left on my head because I used to speculate a little bit, and it's my stomach didn't handle it so well. Okay.
Right. So so the short answer is you're on the Freedom 100 plan.
Yeah, I could tell you that pretty much when my kids decide that they want to take over. There is going to be, there is a legacy plan. I do have children and who could potentially come into the business, but
Right.
unlike you and Alex, I'm not looking for a succession right now. I've got I'm blessed with healthy children doing their own thing, and so far it's working out that this is my business and it's working out. Thank God.
You got to do something. I know we're running out of time here, big time, and Bill's going to be jumping in momentarily to wrap this up. But I wanted really to touch lightly on a very famous foreign exchange incident involving Nick Leeson and the Barings Bank of England. Can either one of you provide a little bit of color on that, and if you had any kind of involvement or knowledge about any details?
You're talking about a rogue trader on the other side of the world who didn't have the policies, the controls, the internal controls to protect the bank. That's what you're talking about.
Right. Right.
And did that cause a crisis for that bank? It certainly did. Okay. For the rest of the world, if they know that somebody is offside, there are sharks in the trading room, and they will smell it and simply say, if they find out that that guy's got this exposure, and the banks play that game. There's a classic story of Canary Wharf being built,
Right.
and the Reichmans were transferring, I think it was $1 billion Canadian, from Canada into pound sterling. And the Minister of Finance came to the bank, I think it was to Mr. Reichman actually, and he said something to the effect of, can you please make this payment, can we make this conversion over 3 days time? We'll protect you, we'll make sure that you're okay, but we want to make sure that you don't impact the marketplace when you take $1 billion Canadian and change it into pound sterling in one small foul swoop. They don't want that. They'd want, a little position, a little bit here, a little bit there. So, but because the traders, once they find out that there's going to be something going on, because a $1 billion trade is not normal. $100 million, $10 million, those are normal trades. Okay, in the bank vernacular of they're big trades, they're suitable, but how do you manipulate it so that the order comes into the order desk and it's not as simple as saying, oh, by the way, we're gonna satisfy that bill right off the bat, because there's not necessarily a big enough market for it.
Right.
So you have to be careful. So today's regulations, and it's funny you mentioned that specific aspect, because my oldest son, that's what he does for Citibank. He's on the innovations part to say, how do we make sure that there's no crashes? How do we make sure that there's no one abusing the system? How do we do things in the background from the software point of view? How do we do the data analysis so the bank is never offside? And so today that possibility is diminished, not completely eliminated, just diminished. The fat fingers, the fat thumbs of yesteryear were used to say, oh yeah, you hit an extra zero. It's possible, but it doesn't happen as often as you think.
Well, it's a fascinating and an interesting business. And Shael and Jeffrey, we'd like to thank you for taking the time today and sharing some of this with us. Bill, back to you to wrap it up.
Yeah, thanks, John. Thanks, Alex. And Shael and Jeffrey, thank you. That was an interesting conversation. The exposure to financial exchange risk for many companies and many businesses is much larger than maybe they realize. And I hope that this conversation helps shed a little bit of light on that risk exposure. John and Alex, if folks are listening to this who want to reach out to you, maybe have a conversation about any number of things that they could be talking to you about, what is the best way to get a hold of y'all?
They can send us an email at info@medwealth.ca. That's info@med-wealth.ca. They can also go to our website, which is med-wealth.ca.
Fantastic. Thanks, guys. And for those of you who are listening to this podcast for the first time, there's something you can do that's even easier than any of this, and that is just simply reach out and hit the follow button. That way you're a subscriber, and you don't have to think about, when did I hear that podcast? Where did I hear it? I wonder how often they drop these new episodes. You will be notified immediately, and you don't have to think about it anymore. It'll be there for you to listen to. Thanks so much for taking the time to listen today. On behalf of John, Alex, and everybody at MedWealth Financial, thank you. And I will remind you that you do have a choice. You can go out today and make it a great day or not. It's your choice. Until next time.
Thank you for listening to Prescribing Prosperity. Visit our website at med-wealth.ca. That's med-wealth.ca for more information or to connect with us for a consultation. Don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the hosts and their guests and does not necessarily represent the views or opinions of IPC Securities Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investment advice. Always seek the advice of a qualified and licensed financial service provider with any questions you may have regarding your investment or retirement planning. MedWealth Financial Services can provide a private consultation to help you determine the suitability of any guidance discussed on the show.